Could Ethereum actually surpass Bitcoin in this cycle? According to Fundstrat's Tom Lee, not only is it possible, it's already happening. In his latest market outlook, Lee says Bitcoin could reach as high as $2.2 million per coin. That's roughly a 22 times from today's prices. But that's not even the headline. He believes Ethereum could become the bigger winner, climbing to $62,000 and possibly $250,000 if Bitcoin hits $1 million. That would mean a 62x move from where Ethereum trades right now. Lee argues that Wall Street is about to build its next generation of finance directly on the blockchain, and Ethereum will be the foundation. From tokenized stocks and bonds to real estate, credit, and even intellectual property, everything that runs the global economy today is being rebuilt on Ethereum rails. Stablecoins, tokenized treasuries, and digital asset treasury companies are already proof of how fast this shift is accelerating. In this video, we're going to break down Tom Lee's new Bitcoin and Ethereum price targets, why he believes Ethereum's 2025 setup is its version of Bitcoin's 2017 breakout, and how Wall Street's move onto the blockchain could ignite the largest value transfer in financial history. If he's right, Ethereum won't just follow Bitcoin this time, it could outgrow it entirely. And before we jump into it, just a quick reminder, only a small percentage of you watching are actually subscribed. If you're getting value from the videos, hit that subscribe button. It's free, it supports the channel, and you can always change your mind later. Now, let's begin.
In our view, Wall Street is going to play a very significant role in creating a market for digital assets. And in our view, the biggest winner here is Ethereum. So let's think about what it means for Bitcoin's upside. If gold today is at 4,000 per ounce, and maybe it'll get to 5,000 per ounce, well, we want to think about what Bitcoin's Bitcoin to gold ratio is. What percentage of Bitcoin's network value should mirror that of gold? And if it's only at 10%, then you get a $140,000 value for Bitcoin. I think that number is too low. I think it's going to basically match gold's value or even exceed it. And that's how you get to the $1.4 to $2.2 million of value per Bitcoin. Another chart to think about is Ethereum's price ratio to Bitcoin. It's currently at 0.036. The average has been 0.047, and the high in 2021 was 0.087. I think that these numbers matter because to me, Ethereum is having its 2025 moment. Like 1971, I think its price ratio should at least recover to its prior high of 0.087. So what does that mean? Well, if you look at Bitcoin's price, and we think it'll be at least 250,000 by the end of this year, okay, that's the rows, so it's the second to last row. If Ethereum price ratio gets to its 8-year average of 0.0479, that implies 12,000 per Ethereum token. If it gets to its 2021 high, which I think is justifiable given how much is happening fundamentally on Ethereum, that's $22,000 per ETH. Okay. But I don't think that's the ceiling. Another waypoint is that Ethereum becomes the payment rails of the future, and so its network value matches Bitcoin. Well, that would be $62,000 per ETH token. As you can see, each of these three values represents tremendous upside.
Tom Lee's model points to a future where Bitcoin reaches new highs, but Ethereum captures more of the growth. His chart outlines how Ethereum's value could expand as Bitcoin climbs through major price levels. If Bitcoin rises to $250,000, Ethereum could be worth about $12,000 based on its historical average ratio to Bitcoin. At its previous 2021 ratio peak, that number increases to around $22,000. Lee adds one more scenario where Ethereum becomes the network used for most digital payments and tokenized assets. In that case, each Ethereum could reach $62,000. The same model extends even further. If Bitcoin hits $1 million, Ethereum could range between $87,000 and $250,000. That would be a 62 times increase from where it trades today. The reasoning behind these numbers comes from Ethereum's growing share of blockchain activity. It supports stablecoins, decentralized finance, and tokenized versions of real-world assets. As these uses grow, more value becomes locked inside its network. This makes Ethereum more than a speculative investment. It becomes an essential part of how financial transactions operate. Bitcoin still plays the role of digital wealth storage. Its fixed supply and institutional support make it the foundation of the digital economy. But Ethereum's role is expanding. Every new on-chain service built for payments, credit, or asset trading increases its demand. That is what gives Ethereum such strong upside potential. Lee believes that over time, both assets will grow together, but Ethereum's reach will extend deeper into global markets. As Wall Street builds tokenized systems and stablecoin infrastructure, Ethereum stands to benefit most. This is where he sees the larger opportunity forming.
Let's think about this other story arc that's going to develop, which is Wall Street is going to innovate on the blockchain over the next 10 to 15 years. Okay, and part of this story arc is, and we've already seen it, is that we're talking about stablecoins, which is tokenized dollars. So that's almost like the 1971 moment. But we're talking about tokenized equities, tokenizing credit, real estate, reputation, and eventually intellectual property. All things that are measured in the economy today. And I think there's going to be invisible measures that get monetized on the blockchain. Data collection, royalty payments, loyalty programs, agentic AI, and even important things like proof of human. So a lot will happen on crypto. And we already know Ethereum has experienced this ChatGPT moment because of stablecoins. Here's just a list of different companies and entities that are building stablecoin projects. And you might wonder, why does the US government care about stablecoins? Well, it's the same reason the US cared about the synthetic dollar staying strong. Today, the US dollar is 27% of GDP, but it's 57% of central bank reserves. That 57% shows you that Wall Street's efforts to make the dollar the standard of transactions after 1971 was effective. It's 88% of financial market trades, okay? But it's basically 100% of stablecoin denomination. So by moving to a synthetic dollar tokenized on a blockchain, the dollar could become even more dominant. And collectively, stablecoins are the 12th largest holder of treasuries in the world. By the way, that's at about 280 billion of stablecoin outstanding. Secretary Bessent thinks it could be a $4 trillion market. But once stablecoins own more than 1 trillion of treasuries, they will become the single largest holder of treasuries in the world. It's not that far away. And equally important, when companies build on the blockchain, they do essentially re-architect their business. They're able to actually become more efficient. And I think there's a lot of reasons for this.
Tom Lee believes Wall Street will not simply invest in blockchain technology, but rebuild its entire foundation on it. The shift has already started with stablecoins, which he compares to the early phase of the dollar's transformation after 1971. Just as the United States moved away from the gold standard and into financial dominance through innovation, Lee says the tokenization era will define the next generation of economic power. The process will begin with tokenized dollars, then expand to include tokenized equities, credit, real estate, and even intellectual property. He explains that every measurable form of value will eventually exist on the blockchain. Beyond the visible categories, there will be new types of assets such as data ownership, royalty streams, loyalty programs, and proof of human verification for artificial intelligence systems. These innovations, he says, will make the digital economy more efficient and transparent. Ethereum sits at the center of this shift because it already powers stablecoins and decentralized applications that process billions of dollars daily. The United States government's focus on stablecoins highlights how strategic this movement has become. Although the dollar accounts for roughly 27% of global GDP, it represents more than half of all central bank reserves and dominates nearly all international trade settlements. By moving the dollar onto the blockchain, that dominance becomes even stronger. Lee cites that stablecoins already hold around $280 billion in value, ranking them among the largest holders of US treasuries. Treasury Secretary Bessent has projected that figure could grow to $4 trillion. Once stablecoins collectively own more than $1 trillion in US treasuries, they could become the single largest holder in the world. For Lee, this development reinforces that the next financial era belongs to blockchain networks, and Ethereum will be its primary backbone.
And we get asked all the time, what is the benefit of Wall Street building on the blockchain? They'll say that banks work fine. I don't see how JP Morgan can become more profitable. Well, actually, companies that are natively built on the blockchain are inherently more profitable. For instance, Tether is raising capital at a $500 billion valuation. Look at the list of the 12 largest banks in the world. Tether is the second largest. I mean, think about that. Tether is 50% bigger than Bank of America, and Bank of America is a giant. It's twice the size of Citigroup, twice the size of Morgan Stanley. It's even bigger than Goldman Sachs. Okay. But here's what's interesting. If you look at the number of employees at Tether, okay, JP Morgan is an $869 billion market cap company with 317,000 employees. That's a market value of $2.8 million per employee. Tether has 150 employees. That's less than JP Morgan's analyst class. It's probably like the June analyst class. And so that means Tether has a market value of $3.3 billion per employee. I think that's what you have to realize. Tether, which is a native blockchain company using public chains, has a value nearly the size of JP Morgan and with only 150 employees. So as Exhibit A, in my opinion, clearly building companies and rebuilding Wall Street on the blockchain is very profitable. Okay, so now I want to sort of fork this into the idea of why this benefits Ethereum and even how you think about digital asset treasuries. So as I said, this 1971 moment is happening to Ethereum in 2025. And why is that? Well, all these firms on Wall Street need to be building something on a blockchain, and they want to build it on a neutral public chain. And as you can see, there are many companies choosing to do this on Ethereum.
Tom Lee often gets asked what real benefit traditional finance gains from building on a blockchain. Banks already function at scale, so at first glance it seems unnecessary. But he says the answer becomes clear when comparing legacy firms to blockchain-native companies. He points to Tether as the most obvious example. Tether now operates with a valuation near $500 billion, putting it above almost every major US bank. It is larger than Bank of America, Citigroup, and Morgan Stanley, despite having only about 150 employees. That means each employee represents over $3 billion in value creation. By contrast, JP Morgan, which holds a market cap near $870 billion, employs more than 300,000 people. The difference in efficiency is staggering. This is what happens when a company is built directly on blockchain infrastructure. It eliminates costly intermediaries, automates record keeping, and allows instant global settlement. For Wall Street, adopting this technology means they can eventually achieve the same efficiency and profitability without expanding their workforce or overhead. That is why the major banks and asset managers are now designing tokenization systems and settlement layers that can connect to public chains. Ethereum has become their preferred choice because it offers neutrality, liquidity, and the deepest developer ecosystem. Lee describes 2025 as Ethereum's equivalent of 1971 for the dollar. In the same way the removal of the gold standard redefined money, Ethereum is now redefining financial structure. Every bank that builds on a public blockchain will need to integrate with Ethereum's open network. That requirement drives long-term demand for the token itself. As these developments accelerate, Ethereum's position as the base layer of tokenized finance becomes harder to challenge. What began as an experiment in smart contracts is now becoming the foundation of Wall Street's modernization. And if you want to stay ahead of these signals and know exactly when the market's heating up or when it's giving you those rare buying windows, I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. It's built to give you quick, actionable insights so you can make smarter decisions without spending hours buried in charts or headlines. You'll get clear signals on when to buy, when to take profits, and the latest news that could move markets, all delivered straight to your inbox. Just click the first link in the description, enter your email, and you're in.
So let me get to this last point about if you're interested in ETH, why would you consider owning a digital asset treasury company? The case study to watch is MicroStrategy, which went from $13 to $335 per share. The way MicroStrategy did this was issuing shares to buy more Bitcoin, and In the 5 years since MicroStrategy started the strategy, Bitcoin was a 10x, 11,000 to 108,000. But MicroStrategy stock went up by 25 times, meaning they outperformed Bitcoin by using their treasury strategy. And Bitmine is following the playbook.
Bitcoin is the second largest crypto treasury in the world,
Raising capital at a pace faster than MicroStrategy. But one of the keys, of course, is Bitmine, and there's a lot of treasury stocks out there, is one of the most liquid names. It is ranked number 26 in the US stock market today, trading $2.6 billion a day. Bitmine trades more per day than Visa and Opendoor, and it trades almost as much as Marvell Technologies or IonQ on a daily basis. Now that's been an advantage because you can see when you look at the 200 treasuries out there, Bitmine and MicroStrategy represent 84% of all the trading volume. So that's where the institutional flows are going to be going in terms of companies holding the stock. And that's allowed Bitmine to grow its treasury holdings rapidly. You can see that in the roughly 9 weeks since the company started, the Ethereum held per share has increased by 9 times. So that velocity means we've vastly outperformed Ethereum. So if you're looking to be bullish on Ethereum, an Ethereum treasury stock can deliver you more Ethereum every day.
Tom Lee expands his outlook by pointing to the rise of companies structured like digital treasuries. These are firms that hold large reserves of Bitcoin or Ethereum on their balance sheets and use that exposure to multiply shareholder value. He highlights MicroStrategy as the clearest case study. When MicroStrategy adopted its Bitcoin strategy in 2020, its stock traded around $13. 5 years later, after issuing new shares to buy more Bitcoin, the price reached more than $330. Over that period, Bitcoin rose tenfold, but MicroStrategy's stock climbed 25 times, showing how leverage through equity issuance can amplify performance. He notes that this playbook is now being adapted to Ethereum through companies like Bitmine, which he identifies as the second largest crypto treasury in the world. Bitmine's structure mirrors MicroStrategy's model, but is evolving faster. It is raising capital at a higher velocity and attracting significant institutional volume. The company now ranks among the top 30 most actively traded US stocks, with daily volume exceeding $2.5 billion. That level of liquidity rivals major names in technology and finance, including Visa and Marvell Technologies. Lee emphasizes that among the roughly 200 digital asset treasuries in existence, MicroStrategy and Bitmine account for more than 80% of total trading activity. This concentration means large investors seeking exposure to Bitcoin or Ethereum through public markets are funneled into these two vehicles. That dynamic accelerates capital rotation into the assets they hold. In less than 10 weeks since its launch, Bitmine's Ethereum holdings per share have multiplied ninefold. Lee points to that as evidence that digital treasury companies can outperform even the underlying asset when markets turn higher. He believes these firms could become a new asset class that bridges traditional equity investors with on-chain growth.
But that's not where it ends. Ethereum treasury companies, I believe, are crypto infrastructure businesses. Because Ethereum's a proof of stake, companies will stake their Ethereum in exchange for providing network security, and that generates a yield. And we believe over time, anybody who tokenizes on Ethereum is going to ultimately stake ETH for the same security reason. And that's the strategy at Bitmine, that we're going to be a community participant in really making sure the Ethereum Foundation and Ethereum developers are successful on DeFi. And the company will make moonshot investments to seed these crossover Wall Street to crypto entities. One of the first investments was Bitmine's investment into 8Co, which is Orbs and the WorldCoin project.
Tom Lee believes the story does not end with companies simply holding Ethereum. The next phase is about how these firms use their holdings to generate yield and strengthen the network. Because Ethereum operates on a proof-of-stake system, companies that own large amounts of it can stake their coins to help secure the network while earning consistent returns. This is what Lee calls the beginning of the Ethereum treasury era. Firms that accumulate Ethereum will not just store it, they will put it to work. Over time, he expects nearly every major organization that builds on Ethereum to follow this path. When businesses tokenize assets or operate decentralized applications, they will stake a portion of their Ethereum to align with the network's security model. The outcome is a self-reinforcing ecosystem where value creation and network security become linked. Companies earn yield from staking, Ethereum gains stability, and investors benefit from stronger fundamentals. Lee views Bitmine's strategy as a practical example of this model. Beyond its treasury, the company is investing directly into projects that connect Wall Street infrastructure with blockchain systems. One of its earliest investments was into 8CO, a venture that supports the Orbs and WorldCoin projects. These initiatives explore identity verification and data integrity, both of which strengthen the foundation for tokenized economies. For Lee, this evolution transforms Ethereum from a growth asset into a productive one. It becomes not only the base layer of decentralized finance, but also a yield-generating network that rewards long-term participation. That mix of security, income, and scalability is rare in any market. He believes this combination could push Ethereum into a new valuation range and make it an even stronger counterpart to Bitcoin's store of value role. Anyway, guys, that's all we have for today. Thanks for watching, and I'll see you all in the next video.